Welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I've got my February dart throws. These are 4 stocks that are under $10 each. Let's see if we can find some deals. And just a reminder, if you like stock market analysis, investment ideas, and personal finance videos, then please subscribe to the 40 Finance channel. Okay, before we jump into our list of 4 stocks, I got one that didn't quite make the cut today, mainly because it got acquired today, right before I shot this video. I had picked out Adesto Technologies last night as one of the 5 stocks I was going to do as a potential acquisition target. And sure enough, it got bought today. So yesterday it was trading in the neighborhood of $7.50. And boom, right here today we're at $12.36. So that would have been a great one for the video. I would have looked like a genius. And in technology, and I would say healthcare or medicine, acquisitions happen quite a bit. Anything that a big company can buy to save themselves research time, development time, and instantly walk into a revenue generating idea, those are going to be your companies that have a good chance of being acquired. Okay, jumping into the list of stocks that weren't acquired today, we have Carrols Restaurant Group, ticker symbol TAST. And Carrols Restaurant Group's been around since about 1960. They basically own and operate fast food franchises. And this is an interesting stock, not so much because of a growth story, but because they have invested and expanded their model. But there's a lot of talk on the street like, hey, did they grow too fast? Is management doing a good job? Carrols owns about 1,000 Burger King franchises, and they've also recently added about 58 Popeyes franchises. And the company has a pretty high debt load, but they also have a very manageable price to book of around 1. So with Carrols, I think what you're looking at here over the past 12 months, you've had a 52-week range of 450 to 1155. Stock's trading at $5.41 right now. And the reason that this one is on our board today is because it's a little bit of a reclamation project, right? If you believe in it. If you dig into the stock a little bit, you'll see they generate billions of dollars in revenue. They also have over $1 billion in debt. I mentioned the management concerns. The thing that makes it different than some of the other stocks that I cover is when you own these franchise licenses and the real estate and some of the things that go along with it, you actually have like tangible assets. And that's where their price to book ratio is actually not too bad. The problem is the debt, and you're waiting for a recent investment in more franchises to pay off. So could be in that 3 to 5 year range on this one. All right, on the Tip Ranks dashboard, we always want to see what the analysts are projecting. None of the best performing analysts are actually following this stock, so that's definitely a word of warning. However, 3 others that all have a buy rating on Carrols, median price target of $8.83. You need to think about reclamation, right? Is this a company that's down that you think can turn it around? The Popeyes part of their franchises, I guess, is what sort of caught my eye. You also have Burger King that's been pretty inventive on their food options here lately. So take a look and see if Carrols might be a long-term investment. All right, next on the list, we got Sirius XM Holdings. And the reason that Sirius XM is on here, you see that they've had a nice run up here over the past year. Got a 52-week range of 523 to today's price of about 740. And the reason I included Sirius is because they're building a little bit of a nice media model, so to speak. We all know about the Sirius XM relationship as far as being in cars and online and stuff like that. They also bought the Pandora music app, I believe last year, and most recently they made their purchase into SoundCloud. And what makes that acquisition interesting is it's a pure podcast play. Podcasts are growing pretty rapidly. There's literally thousands and thousands and thousands of podcast shows. It's becoming an alternative advertising platform. Basically, audio advertising has definitely got a boost over the past few years. I project that medium of advertising will continue to grow, and I like what Sirius is doing as far as basically being in everyone's car, whether or not it's turned on. Then you have the Pandora acquisition, which is perfect for internet radio listening. And then you have the SoundCloud on the podcast side. It's a nice mixed model. On the tip rank side of things, we got 3 of the best performing analysts covering this stock. All 3 have it as a buy. Median price target of $8.42, which is a 14% upside. Don't forget too that Sirius just had a relatively substantial run up here. You may want to wait for the next market pullback to jump on this one. All right, next up on the list is Acoustic Technologies, ticker symbol AKTS. And Acoustic Technologies basically makes radio frequency filters for mobile phones. So it's basically a technology play and a cell phone play at the end of the day. It's they make a part for cell phones. And the bull case here is that the 5G revolution, which I personally have yet to see happen, but the 5G revolution that's supposedly coming here soon is going to increase demand for new phones, which would obviously increase production and orders for Acoustic Technologies. Not to mention, we're in a tech stock here, which is always going to have the potential for a buyout opportunity. No PE ratio to speak of, forward or backwards. Current price of $8.29. 52-week range went from $5.17 to $9.25. They're just coming off of a little bit of a pullback, let's say from a few weeks ago. So again, this is a tech play. The question is, do you think Acoustic Technologies has the patents and the technology to, 1, increase sales substantially in terms of the next wave of phone upgrades, and then 2, are they a candidate to be acquired? If you say yes to those 2 things, then you probably have a stock worth looking at. From the tip ranks, best performing analysts, we have 4 buys, 1 hold, median price target of $10, which is a 20% upside. You got a high bar of $12 and a low of $7. So there is some interest and some projection that Acoustic Technology has potential for the future. But as always, do your research and make your own judgments. All right, stock number 4 today is Aspen Group, ticker symbol ASPU. Aspen Group is an online education provider. They have just a little south of 10,000 students enrolled in their online schools, which offer everything from bachelor's degrees to trade certificates, project management certifications, things like that. And what I really like about Aspen Group is this is not going to be a rocket ship ride to $20, $30, whatever. What I like about Aspen Group is actually just the fundamentals of where they stand today at the current price. You don't have a PE ratio. The forward PE is kind of high at 133, but fundamentally, they already have existing revenue channels in place. They don't have a ton of debt. The online education space is definitely going to grow over time. The question here is, do you believe in their online education model? Do you see it as something that grows? I think education right now, secondary education, is ripe for disruption. I'm not suggesting that Aspen is going to be the one to do that, but what I definitely do see is less people paying for formal college, campuses, dorms, the whole thing, and opting for online options while they work in the background instead of taking on, tons of student debt and end up in 5 years underwater. On the tip rank side of things, you got a median price target of $11.50, got one high bar at 12 and another at at 11, so only 2 analysts chiming in here. However, they both see some upside opportunity. We went back to that chart, you know, the 12-month chart. You see that Aspen has run up already. You got a high PE for a high forward PE. So maybe the best thing to do here is just add it to your watch list. See if you can pick off some shares in the $8, $7 range, and then let Aspen slow burn for the next 3 to 5 years while you watch the online education category and see how it grows. Okay, so I think the big theme here with these stocks on February's dart throws is, you know, 3 out of the 4, and including one that got bought out before this, had a huge run up. Okay, they've already had a huge run up. We talked about the reclamation project with Carrols restaurant group. You're looking at a couple things, okay? You're looking at either a beaten down stock like Carrols that you think has the ability to turn things around, or you're looking at the valuations for some of these more promising stocks have really gone through the roof, and I think we see that a lot in the stock market right now. So is now the right time to throw your chips down? If you're getting one of the ones that's already run up, say 25-30% this year alone, then at least for me, I'd be inclined to sit back a little bit and just really dig through the research on any of the ones you'd like here or any other stock, add it to a watch list, see how the market moves. We're definitely going to have a correction of some sort coming up. That I just don't see any other way about it. How much it is, I'm not sure, but that might be your opportunity to buy. Hope you guys enjoyed this video. Please give me a like and subscribe. I'll see you on the next video.